Welcome, everyone, to this LinkedIn Live. I'm Sean O'Neill, Skift Senior Hospitality Editor, coming to you from Washington, D.C., and I'm joined by my London-based Skift Research Analyst colleague, Pranavi Agarwal. How are you, Pranavi?
Sean, how are you doing?
Very good, thanks. Congratulations on publishing your report last week, Recession Watch on the hotel chain scale. They must have been good to get that out of the door.
Yeah, thank you. Yeah, quite a big, scary topic, the R word, recession. But I'm pretty pleased with how it's come together. So yeah, do check it out.
You should be pleased. I read it this weekend. It's awesome. It's brilliant. I really like the analysis. You get Skift Research's forecast for the hotel sector. You touch on there. You talk about the hotel chain, which obviously hotels go up a scale from economy all the way up to luxury resorts, and what's happening in each individual scale may be different in depending on what the economic circumstances are. So the idea for this LinkedIn Live came from you, Pranavi. You sort of had the idea that maybe we could talk through some of the points from your report to the audience. And so that's what we're going to do in the next 20 to 30 minutes. And along the way, we're going to touch on some big picture ideas for the hotel sector that we'll be also covering at the Future of Lodging Summit on March 29th in London. Pranavi, it's going to be great to meet you in person there. You're going to be interviewing some great executives on stage, and we're going to be touching on a lot of topics. And if you listen in for the full session today, we'll have a code for you so you can get a discount on the Future of Lodging event. So we hope to be able to see you in person at the end of the month. So Pranavi, I guess maybe we start. What is the basis of your report?
Yeah, the basis of the report was really trying to place how the travel industry and how the branded hotel players in particular might perform as we enter a potential recession in the US this year. So much of the analysis is really looking at hotel performance in times of crisis and recession in the past, such as in 2001 after 9/11 or in 2009 after the great financial crash. But I think importantly, we also consider why a recession in 2023 might be very different to recessions we've seen in the past, and why the hotel industry can afford to stay optimistic in the face of economic uncertainty. So if you just get the first slide up, we've seen that we've seen that in general, it is the mid-scale hotels. So those are the hotels at a mid-price point, between the top-end luxury hotels and the lower-end economy-style hotels. These mid-scale hotels are really the ones that tend to be the most resilient in times of recession. So why is that? It's certainly the price point and the value of money that these hotels offer, but mid-scale hotels also appeal to many different types of consumers with different reasons for traveling, and thus they speak to a bigger audience of consumers than any other chain scale in the US, and we can see that in the data as well. There are more mid-scale and upper mid-scale hotel rooms than any other chain scale in the US, and we do go into that exact breakdown of supply in the report, so do check it out. But generally, if there is a recession in 2023 and there is trading down and consumer wallets are squeezed, then we can expect mid-scale hotels to, again, show resilience.
That's cool. So let's imagine that we have a global recession this year. The conventional wisdom would be that people would trade down from, say, luxury to mid-scale. But in your report, you sort of argue a bit counterintuitively that luxury should perform pretty well this year. What is trends are you seeing in luxury right now?
Yeah. The trends that we're seeing in the luxury segment have been really interesting, very different to what we've seen before. And if you just kind of take a step back and kind of look at the whole market, generally across the whole market, across all the chain scales, we have seen that it has been strong pricing, which has really led the COVID recovery, whilst occupancy levels, which you can take as a proxy for demand, that has lagged in the recovery. And this pricing strength has really been led by the luxury segment in particular. So if you can get the next chart up, please. Yeah, so we can see that in this chart, you can see that luxury prices, that's shown by the black bars labeled as ADR. So ADR, which stands for average daily rates. These ADRs, these prices for luxury hotels are up more than 20% compared to 2019 levels, versus only kind of 10 to 15% above 2019 levels for the other chain scales. But, in contrast to such strong pricing that we've seen in luxury, actually occupancy levels at luxury still offer the greatest recovery uplift out of any chain scale. And you can see that by the gray bars, which show occupancy versus 2019 levels. And you can see that occupancy levels for luxury hotels are still down the most versus pre-COVID out of any chain scale. And as that demand, as that occupancy kind of recovers back to 2019 levels, we should see further pricing growth in line with that. And I completely understand what you're saying. The strength in luxury that we're going to see in 2023 is counterintuitive. Luxury is a pro-cyclical segment. It behaves in line with economic cycles. So it underperforms during downturns and outperforms during upturns. And what I'm saying is kind of the opposite of that. We look back to 2008, 2009, we did see that luxury prices declined the most out of any chain scale. But through the COVID recovery, luxury prices have really exhibited high pricing power. They've benefited from huge pent-up demand, high savings rates, and that's really allowed the leisure-skewed luxury resorts in particular to really raise their prices in response to that high demand and within this kind of compressed market that we're in currently. And then obviously there's been very high inflation rates as well. So already the demand and pricing dynamics are very different to what we've seen in the past.
So for people who are watching at home, I want to remind you, you can ask questions in the chat feature, and we'll get to them at the end. So Pranavi, what I'm hearing from you is that maybe strength in luxury can continue in 2023?
Yeah, I think both luxury pricing and demand will stay very strong. So maybe if you just take both of those in turn. So starting with demand, for this report, I spoke to a few hotel executives, and the overwhelming message was that demand for luxury is expected to stay strong, despite general fears that COVID stimulus checks have been spent and consumer savings have been depleted. And in the report, we have shown survey data which shows that more than half of high income earners have actually seen their savings increase in 2023 versus 2022. And these are the typical consumers who stay at luxury hotels. So in terms of the demand, I think luxury spending will stay resilient. And we've talked about this already, occupancy is still down the most versus 2019 levels. So there's still that recovery uplift to go. And as that demand recovers, pricing should rise in line with that. Though I don't expect that luxury pricing growth it will be sustained at those very high levels we saw in 2022. Those growth rates will moderate in the second half of this year. But on an absolute dollar level, those high luxury prices are here to stay. Luxury is the only segment to see any real pricing strength, i.e. pricing above inflation levels. And we've seen, and I've shown this in the report, that there's been this catch up in the luxury pricing growth, which stalled post the 2008, 2009 crash. And it's finally caught up to that trajectory where it should have been had there been no 2008 crash. And luxury prices are here to stay. So, I'm very optimistic for both luxury pricing and luxury demand. And then I think one thing to also kind of point out is that unlike what we saw a decade ago, there is a lot more pricing discipline in the hotel industry than there was in the last recession. Hotel managers are leveraging more kind of sophisticated revenue management, technology, data analytics, and all those things are really helping maintain pricing power and prevent that kind of rate leakage that I think people are fearing might happen in 2023. So very, very optimistic for continued strength. And that's really been corroborated by other forecasts, other third parties, and we've shown that in the report as well. So it's not just me.
That's really fascinating that there's been certain structural changes, like you're pointing out, that such as the technology being a little bit better, and then also luxury trying to make this catch-up game since 2008 that it's been lagging. And I guess let's move on the conversation to supply growth. Like, how are the hotel brands sort of adding more luxury, and what's your point of view on that?
Yeah, so very similar story, kind of similar to the catch-up that we've seen in luxury pricing. There is a catch-up as well happening in luxury supply growth. We saw that luxury hotel growth stalled after the great financial crash in 2008. And what we're seeing now is that this outperformance of the luxury segment that we saw last year, and expectations for that to continue into 2023, that has really attracted developers and investors into the space. So if you could just have the next slide up, please. I think this chart really sums up the market and kind of where the white space opportunity is for growth. And you can see that white space opportunity is in luxury, mid-scale, and economy, whilst the upscale market is pretty saturated. These are the hotels which skew to corporate groups with big meeting rooms, and companies like Hilton, Marriott have already captured much of that market share in that space. But luxury, mid-scale, economy, these are the opportunistic segments. And if you kind of look into luxury in particular, we're really seeing that the brands are pushing into luxury. We go into a lot of detail into kind of pipeline growth by region in the report, so do check it out. But one kind of data point I would point out is that globally, branded luxury rooms currently account for 6% of the total branded supply across all chain scales, but it is 8% of the pipeline, which means that there are further share gains to come in the luxury space, and it shows that the brands are pushing into that space.
That's pretty fascinating. I have to say, this chart, I was sort of like staring at it when I had seen it earlier. Like, there's like 5 or 6 good story ideas out of this. It's just interesting in which way the hotel sector will evolve. You've mentioned that, many of the brands are pushing into luxury, the pipeline going from 6 to 8% on luxury. But I imagine the brands are also pushing into the mid-scale segment. Is that right?
Yeah. So in addition to luxury, the other great white space opportunity is in mid-scale or premium economy. And you're right, we've seen a lot of brand launches in this space in the last few months. Hilton has launched Spark, Accor has launched Handwritten Collection, Marriott's launched City Express. And, it just goes to show that the big brands are clearly building out that portfolio to be diverse across all the different chain scales. For example, Hilton, before they launched Spark, they didn't have any hotels in mid-scale or premium economy. But at Q4 earnings, Chris Nassetta, who's the CEO of Hilton, he said that he expects Spark to be their biggest brand in terms of rooms, in the future. So we are seeing this strategy where the branded players are going after share gains, both in the kind of upper end, the luxury segment, but also in the lower end, in the premium economy space.
Well, so I guess we're seeing this at different parts of the scale. Was there anything that when you did this report that sort of like surprised you, Pranavi, that sort of like stood out? Maybe a little color in what you've already said. I know you've sort of highlighted some things.
What surprised me? Yeah, I guess just the luxury segment in particular, this chart which shows share gains. I guess I was questioning, if luxury is so attractive, why haven't the hotel companies expanded into this space, more aggressively before? And kind of, I think whilst luxury hotels are attractive, they offer high revenue streams, and they're definitely higher fee revenue generating than a mid-scale hotel. They are difficult to build. They take a long, they take a lot of time. They have a lot of costs associated with building them, and it's very hard to organically build a luxury hotel. You have to it's very hard to build that brand recognition in the luxury space. And that's why we've seen that a lot of the conversion or soft brands, they tend to be in the luxury space. And luxury tends to offer lower margin, lower return on investment because of kind of those high costs involved. Whilst, mid-scale, they're very quick to get into the system. And, after the crash in 2008, we did see this push towards the non-luxury segment because they were safer investments, basically. So I guess the answer is that, had there been no crash, this would have been a completely different story. We might see that luxury is really saturated, whilst upscale is not, and really going after those groups and business travel customers. So yeah, very interesting to see this catch up really happening in luxury, that which stalled, which should have happened but didn't, which I think I just find that really, really interesting.
It is really, really interesting. Thank you for that, Pranavi. We have a question from Yogesh Chandra. Will the recession not delay the occupancy demand in luxury pricing? What do you think for Yogesh? It sort of builds on some of the points that you had made, because there is this dance between occupancy and rate. And one of the things you were pointing out, Pranavi, was that the hoteliers have been much more disciplined, pricing discipline, on focusing on rate, even if the occupancy had come back. They've been still pushing on rate. Do you think how do you think the recession will delay the occupancy bounce back?
Look, I think I asked this question to a lot of people, and it is a key question. If there is a recession, will that affect demand as consumer wallets get squeezed and people downtrade, and luxury is affected by that? And the real resounding answer I got is no. With the luxury demand is continuing to stay resilient, and a lot of luxury demand comes from, versus other chain scales, comes from international travelers, and that has just been restricted for 2.5 years now. And as Asia opens up, and with that comes huge pent-up demand, huge savings, just as we saw in the US and just as we saw in Europe. That's a major uplift, especially for luxury hotels in the US and in Europe. So no, I mean, I'm pretty optimistic that demand will come back. And I think we've got to remember that travel in itself is a luxury. It's inherently a luxury segment, right? And the consumers who spend at luxury hotels are going to be more resilient in a recession. They're not going to be affected as much by a cost of living crisis or high inflation or high interest rates and things like that. So I'm pretty optimistic for luxury occupancy to come back. And I mean, the next question you could ask is, if pricing for luxury is so high, why is it that occupancy has been, is so down? If demand for luxury has been so great, why is it? And that's because there's a very tight labor market in the hotel industry right now. And luxury hotels have to deliver a certain level of service and have to deliver on these amenities, which makes a luxury hotel luxury. And, they've had to restrict the occupancy in order to still provide that service within the tight labor market and within the amount of staff they have. And there's no sign that that's easing massively, but it is easing a little bit. And as that eases, we should see kind of occupancy levels kind of recover in line with that.
Thanks, Pranavi. And Yogesh Chandra, thank you for that question. So we have a question from Neil Shears, which is, what impact will the return of the Chinese traveler have in 2023? And I'll start off with this, if that's okay, Pranavi. So
Please.
My colleague Alan Wojnski, who edits our daily lodging report, which is a great subscription publication to have, I'll make a plug there. He has been covering in the past few days Nomura Securities, the Japanese-based investment bank. They've been closely tracking, the Chinese outbound rebound, and they say everyone is sort of expecting that what happened in North America and Europe, a V-shaped dramatic spike in recovery, was going to also happen in China. And they're saying they're very skeptical of it, that it may be a much more phased. Instead of a stampede of outbound travelers, it's going to be more of like a fast walk. And a couple of the reasons are that air capacity is not rebounding very fast. This is a problem throughout Asia. A lot of the hotels are being held back because the inbound air capacity is not coming on fast enough. The government of China is also phasing in some of the outbound tours. So the latest in the past 24 hours, China added several countries to its list of where Chinese outbound travelers can go on group tours. But certain markets like Japan, United States, and Australia were not included, and that's sort of tied up with some geopolitical issues. And also, China's had a very uncertain economy right now, according to Nomura Securities. So the bounce back may not look exactly the same. So I don't know if you have any, for Neil's question, I don't know if Pranavi, you had anything that you wanted to add about the Chinese traveler.
I think that covers it. I think it will be a bumpy ride, but what we've seen in the past is that the moment restrictions are eased in China, the demand recovers pretty much immediately. And as we enter into a more stable state of kind of less kind of bureaucratic, red tape or whatever, I think we should see that the Chinese traveler is going to be very strong. But if anything, it kind of extends the recovery timeline.
Yeah, I think it's
And
actually a good thing to extend the recovery timeline. Yeah, that's actually good for the hotels to have more of a sustained, phased in. Yeah.
right, exactly.
Aditya has a question. Will these trends of luxury hotels having pricing strength be applicable to all types of economies or only developed economies?
Of luxury pricing strength only. Well, I think one place that we're going to really see luxury strength is going to be in Asia, and we've seen that in terms of the growth. If you look at pipeline of luxury hotels, it's really being led by Asia and also Caribbean and Mexico, where there are a lot of kind of luxury resorts. And I think those areas are really going to lead the luxury segment. Is you know there's more demand for luxury hotels and more demand for travel, and besides the recovery, besides the fact that these people in Asia have not been able to travel, besides that, I think if I was going to put my money somewhere, it would be luxury hotels in Asia. I think that's really where we're going to see a huge amount of growth and a huge amount of demand.
That makes sense. Aditya has another question, which is Africa the new frontier of luxury? He points out that major chains such as Marriott and Accor are heavily investing on the continent. And I would point out, it's not just Western brands. China's Xinjiang and several Chinese companies have also been looking at it. Even some of the high-end India, like Indian Hotels Company, the owner of Taj and Oberoi, is looking at India. So I think Africa is definitely has seen more signings, that we've seen the flurry of announcements. But it is, I think as we come out of the recovery, some of the Western hotel groups, there's only so much bandwidth as they try to build back up. And some of them are seizing, as Pranavi was saying, the opportunities in Asia Pacific and also in the Middle East is just consuming a lot of attention as this major greenfield area. But I think over the next 10 years, the dynamics of strength in many of the countries in Africa just have incredible prospects, and it only makes sense that the hotel companies there will do well. In Nigeria, for example, the largest hotel company there had its best year ever in the past 30 years, and a lot of that was in the strength of their higher end premium and luxury products. We have a question from Carolyn Cremens. As labor recovery happens in hospitality, will we see the direct impact in higher occupancy? You're saying occupancy is being managed by the hotels themselves. Pranavi, do you want to take a crack at this? Or?
Yeah, I kind of alluded to this a little bit in my comments before, but the reason that in luxury occupancy is still down so much is because they just don't have the staff to be able to offer the same level of service. And as labor, as that tight labor market kind of eases a little bit, we should see more occupancy come back into the system, and it won't be as compressed a market as we're seeing right now. And obviously that compression has also led to high pricing power. So I mean, I think this is a very good question, because it builds into the whole scenario of what we think 2023 is really going to be led by, what the recovery is going to be led by. And I think it's going to be more balanced between occupancy and pricing as kind of compression eases, as the tight labor market eases. Whilst in 2022 it was very much led by pricing, and now it's going to be balanced between occupancy and pricing. So yeah, great question.
Raphael has a question about what's your take on the luxury new developments announced for Saudi Arabia. So I'll start off on this. The Middle East, it is a remarkable region for growth for a couple of reasons, so both the supply and the demand side. And Saudi in particular is an incredibly intriguing opportunity. As you know, they have incredible growth targets between now and 2030, but a lot of the projects are still dirt. A lot of work still has to be done. And so there's going to be a lot of bumps in the road in terms of doing it operationally. So it'll be interesting. It's definitely trying to have a luxury product. What's positive is, as Pranavi was pointing out, as China comes online, that means the economy rebounding back. That means the prices of commodities, especially oil, is going to go up. So you're going to have a real strong economy probably for the next few years in the Middle East, which will help them stay on track and really encouraging these developments to come through. It's very important high-level priorities for them. And then on the demand side, what's great about the Middle East is it attracts, Chinese tourists, Russian tourists, tourists from all over the world, whereas other places are experiencing geographical tension. And a lot of those are high spending customers. So I think luxury in the Middle East is pretty good. We probably have time for only one more other question. Isaac is wondering whether whether the luxury or economy is going to be the lead in the Middle East. You were looking at sort of chain scales. When we were in our event, Pranavi, when Skift did our most recent event in Dubai just a few months ago, what we were hearing from the leaders from the United Arab Emirates and from Saudi and from other leaders in the region was that they want to build a full offering. They don't just want it to be luxury. Although we're talking here about luxury for all the obvious reasons, they do want to have the full chain scale. And it's also partly developing their own internal tourism. Saudi is very committed to trying to encourage tourists, something that happened starting in the pandemic, to try to encourage its domestic tourism market. And not everyone can be in luxury all the time. So I think filling out that chain scale is going to be important. Unless you have something to add to that, Pranavi.
Yeah, I guess I have one other chart which perhaps we can show, and I think it kind of links to that last question about should you focus on luxury or economy, and it's good to be diversified across all the chain scales so that you're prepared for periods of upturn and periods of downturn. And I guess so if you go into the next slide, which shows kind of mix by chain scale, and the question who will be the winners in 2023, and I think it's a good way to conclude. And we've talked about a lot about how we think that luxury will continue to show strength even in the face of kind of a potential recession, and that's unlike what we've seen in previous kind of downturns. And we think that luxury hotels in Asia Pacific are really likely to show the biggest uplift, and that's similar to what we've seen in the US and Europe last year. And really in that scenario, in this base case scenario, I'd expect that Hyatt to outperform peers. It's the most exposed to luxury and to Asia Pacific amongst the major hotel groups. But look, if we're wrong and there is a more severe recession than we anticipate, for the record, the CEOs of hotel brands, they don't expect that. They expect a soft landing, a moderate recession that will see plateauing of growth rates rather than growth rates going negative. But if we are wrong and there is, we see the more traditional mid-scale hotels prevail and luxury hotels suffer the most, then I'd expect IHG, Wyndham, Choice to offer the most protection. They're most exposed to that mid-scale kind of segment. And then, if there's a mixture of those two scenarios where luxury continues to do really, really well, but there is more weakness towards the lower end of the chain scale, then in that case, I'd expect Accor to really come out top. It's the most diverse across geographies and chain scales out of any hotel brand. But generally, I'd expect companies that are most exposed to areas of further recovery to outperform in 2023, and those areas are luxury, which still has occupancy, the least recovered out of any chain scale, and then also Asia.
I'm so glad you had that chart there. I think you were trying to cue me to do that, and I missed that earlier. So sorry, Pranavi. That was a good point to end on. Thanks everyone for attending this LinkedIn Live. We will have a code for you if you would like to attend our Future of Lodging Summit in London. Get to meet me, get to meet Pranavi at the Londoner Hotel on March 29th. We'd love to meet you, and you'll get to meet a lot of powerful, important leaders and innovators in the hotel sector who will be attending. We are grateful for you being here. Maybe we can bring up, I don't know if we have a QR code to actually show on screen, maybe for the Future of Lodging event. Thank you very much to everyone who has attended today. Pranavi, I really enjoyed this conversation. I'm actually looking forward to getting to finally meet you in person in London at the end of the month.
Yeah, really looking forward to it. Should be a great event. My first event for Skift. And yeah, thank you everyone for listening. And I hope it was informative and insightful.